Oh, was Musk at the inauguration? Bitcoin miners see 3x profit margins despite higher network difficulty. Glassnode's difficulty regression model estimates the cost to mine a single Bitcoin at approximately $33,900. Now, I think it's higher than that for us plebs, obviously. And depending on the efficiency of your particular unit as well. So, and the Bitcoin difficulty going up only makes sense. Why? Why does that make sense? Well, people like me are turning on all their ASICs that they've been stacking that are now, able to swing daily trade highs to stay profitable, right? It's still extremely difficult, and sometimes I screw it up and I'm super scared of it, but it is what it is. I think the cost to mint is a lot higher on average, but I think you have large companies with the most efficient miners with very cheap power, so there's that. Well, that's a good question. Is cost to mint just power? Even if it's just power, I would think that's rough, but yeah, that's a good point. I don't know this regression model if it includes cost of miners. I don't know that you could actually include cost of miners because cost of miners are based off the price of Bitcoin. So that's kind of that's a sliding scale, right? So it says this profitability margin is still suppressed by growing competition among miners, with hash rate steadily climbing amid this bull run. According to Glassnode data, revenue per exahash stands at $60,800. Miners' cash flow per mined block was reduced in April when Bitcoin halving slashed revenue from 6.25 to 3.12. Isn't it crazy that it is, if you guys watch my crypto mining course that is no longer up because we have to make a new one now for the bull run. But if you watch that, we talked about it happening in April, and then we said the bull run would begin about 6 months after, and then the peak would be 18 months after. Right now, when did it in particular start this time? I have to go look it up again. But it was pretty close, right, to hitting that 100,000 right at 6 months. It was a little later. So I'm still on pace with the strategy of essentially 200,000 roughly Bitcoin and what do you call it? Peak miner prices and all that within or basically 18 months out, maybe 20 months out. It'll be interesting to see exact dates and all of that. But a lot of people were trying to say that we weren't looking at the same pattern, but I'm still seeing a similar pattern here. It's a crazy, crazy pattern. So it says mining is key to security and functioning of the Bitcoin network, and miner resilience has proved beneficial. Not just Bitcoin, but to energy grids overall. As Cointelegraph reported, Bitcoin miners saved Texas $18 billion by eliminating the need for new gas peaker plants and acting as a grid stabilizer. With declining revenue and increasing competition, miners moved to diversify their activities in 2024 into high-performance computing and artificial intelligence businesses. Hive Digital, for instance, repurposed part of its NVIDIA machines for AI applications over the past year, generating over $2 per hour in revenue compared to 12 cents per hour from crypto mining. Bitcoin miners are also stacking up their Bitcoin reserves, following the playbook of companies like MicroStrategy. Quote, in 2024, a notable shift emerged among Bitcoin miners, with many opting to retain a larger portion of their mined Bitcoin or refraining from selling altogether, according to a report from Digital Mining Solutions and Bitcoin Mining Stock.io. You know what the maximum macro would have been, really, though, to be honest? Because the reason these miners were selling is because they were forced to sell to cover power bills, and it had reduced the price so much that they weren't prepared for it. If they would have been a little bit more prepared for it with their risk management and sold a lot more of their Bitcoin at the top of the last cycle, they could have floated all through the cycle, mining their Bitcoin without having to sell a bunch of it, and you'd be in a much better position. In fact, I think it's to the point to where, micro strategies buy and hold Bitcoin strategy, outpaced, obviously, the Bitcoin mining strategy by and large, right? So we'll have to see how it goes. I think you got to have a much longer time horizon with Bitcoin mining and cryptocurrency mining in general. And that's something I'm trying to learn. This will be my third full cycle. And I'm kind of learning, how much do you really need to get into cash reserves to be prepared to take advantage of, price of equipment going down and the price of cryptocurrency going down and so on. Like, what do you need to have in your reserves, and what is good risk management as far as all that's concerned? I didn't really do a whole ton of risk management on the last cycle. That's why I ended up in a pickle like I did, along with a few other reasons. But I think, we can just perfect that strategy a little bit more and be a little bit better off for the next time it comes around. Yes, Tactics says Master holds Bitcoin 447,000 Bitcoin at an average price of 62,000. Yeah, I mean that definitely seems to have worked. And then Shoe Monster said Dems ruined crypto. Hopeful we regular guys can be profitably mining soon again. And that's I think one of the bullish things I heard on Inauguration Day from Donald Trump was he was going to get energy costs under control. And I think that it wasn't a single factor this previous cycle. So if we go 2 cycles ago and you get into 2018 and the price of crypto is coming down, at least your power didn't skyrocket at the same time. So home miners could still mine feasibly, and like smaller players could still mine from a power perspective. And when it started coming back, mining was really already pretty decently profitable at this point in the cycle last time because of the cost of energy. Whereas this time, it's a lot more difficult. Even right now, why I was giving you the strategies, surrounding when to buy and sell and your risk management for covering your power bill and all that earlier, is because, we are still having to play that game of making sure we have enough to cover power and all of that. It's a very difficult and tricky situation. So, and I think right now, I did say this, like my personal strategy right now, as far as things are concerned, is I'm stacking total hash rate over efficiency right now. And the way I'm playing out this cycle the next time is when we hit peak, I'm liquidating everything and buying the next most efficient thing as soon as it comes out. So that's kind of my strategy. Because I know you said you mine your efficient equipment, and I think that's fair. But I don't think buying efficient equipment over buying the most hash rate is necessarily the strategy for growth as I see it. Because right now, the strategy for growth is get as much hash rate as possible so that it compounds as quickly as possible, right? Once you're overpaying for the power bill at this point, which we already are on most older equipment, not all the way down to like S17s or anything like that yet. I presume we do get to that point, but once you're into that profitable range, like let's say like an S19 Pro, I think is right within that green range, depending on your power cost and all that. I think if you look at like an average hosting fees of like 8.5 cents a kilowatt hour or whatever, you could get it hosted, buy one of those. They're barely green, but if you have a whole bunch of them, when they get more and more green, you've just compounded it, as opposed to just having a single miner where you're already covering that cost. You know, that's kind of my strategy. I'm cool with everybody else's strategy if they want to share them, but that's kind of the way I've been looking at it. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.